welcome back to a brand new YouTube video. In today's video, I'm going to be going over how I actually use the inversion fair value gap model and the exact criteria that I use before I enter any single trade. So I've got two trade examples for you that I'm going to go over, breaking down every single aspect of why I took the trade. If you do like how I teach and you do want to be mentored by me and talk this model one-to-one, I have got a trading Discord in the description. If you do want to join that, it's completely free. I actually teach one-to-one and I live stream every single day. So yeah, it's completely free. You may as well join. While we're on the topic of promotions, I may as well talk about these funded plaques. You've probably seen them everywhere. If you would like to get yourself some of these funded plaques, they look unbelievable, then there will be a 10% discount code as well in the description. But yeah, now the promotions are out the way, let's get straight on with this video. I'm going to teach you how to use the inversion fair value gap model. So jumping into the chart, you can see this is a trade that we actually caught on Friday. So inside of my Discord, we caught this trade on stream to end the week off really nicely. It was just under a 5 risk reward with 0 drawdown, 130 points. Literally one of the best trades I think I've taken in a very, very long time. Probably the best trade in 2025. So yeah, I'm going to break down how we actually caught this trade and show you the reasoning behind it. So on Friday, we had red folder news at 3 PM New York time. 10 AM New York time, 3 PM UK time. So you can see here that we created this abnormal wick, and if you didn't know already, then a news high and a news low is an extremely strong draw on liquidity. So that means if you ever see a news candle, you should be targeting the high or the low of that exact candle. Now this only applies if the news candle is abnormal. If the news candle looks normal, okay, just like a small candle, then that isn't valid. It's got to be an abnormal wick. And as you can see, this wick here is nothing like anything else around it. So this is where we will target the news high. So going into Friday, my bias was bullish to try and take out this news high. Now, if you're familiar with using the inversion fair value gap model, you'll know that the first thing we need is a liquidity sweep. So here I was looking at this low to be taken out and then look for longs back up to this news high. Now the reason that would have been valid is because we would have been tapping into this unmitigated bullish gap. So you see, when I play price through, we do actually sweep out this low perfectly and we leave a singular, clear and obvious bearish fair value gap. Now this here would have been a perfect trade. If this had inversed, I would have taken this long and it would have gone to this news high. Okay. Now the reason that would work is, again, like I've just said, we're delivering from a higher time frame fair value gap. So this bullish gap here, we can see, you can clearly tap into it. We've also got a clear and obvious 1 minute bearish fair value gap, as well as taking out this internal low. So if we got a candle close back above, we should go to this news high. And you'll see when I play through, price doesn't actually go through or displace this fair value gap. We actually just respect it and continue lower. What we then do is create another clear and obvious bearish fair value gap. Now this is really important. Whenever price makes another fair value gap, when you're trading this model, this one now becomes invalid and this is now the one you use for your inversion. Now I get a lot of DMs from people asking me, which fair value gap do I use? How is it valid? Now the way I think of it is, whenever we create a new fair value gap, this one then instantly becomes invalid because we've already respected it. Okay, you can see we've wicked in and respected it. So this now becomes invalid, and this is the one that we will now use to go long from, if we inverse of course. So what we would be looking for is price to come up, displace through it, and we would enter a long position when the candle closes back above. Okay, and we will target this news high. Your stops to break even point would be the first internal liquidity point, which is this swing point there. So if price hit this level, we would then close out a partial or leave the trade running, but we would take our risk off the table and go break even. The reason we do that is because we do not know if price is going to respect this bearish fair value gap. Okay, we do not know if price is going to inverse this gap and go to news high, which we hope it would do, but we don't know that. Okay, so the reason that we go break even is because price could easily take out this internal liquidity, okay, tap in and then reject and hit our stop loss. So that's why we take our risk off the table completely. So again, on stream, I was just saying, if we inverse this fair value gap, I'm going to take a long position to the news high. You can see we come in and we actually respect the fair value gap again. This is another example of where this fair value gap now becomes invalid. Why? Because we have just created another bearish fair value gap after sweeping this external low to the left. So now that we've swept this external low and we have still got these bearish fair value gaps, all we need to now look for is a clear and obvious gap. So as you can see, these previous 1 minute gaps were clear and obvious. Okay, this is such an obvious gap, as well as this one. This one down here is not so obvious. Okay, it's not as obvious as the ones before. So this now means I would look to a different time frame like maybe the 2 minute or the 3 minute, to see if we've got any other fair value gaps. On this exact trade, we actually didn't have any other gaps. So this 1 minute is the only fair value gap. So we would actually combine these two fair value gaps together, because there's a little fair value gap there and also a little one in between, and there's no 2 minute gap. So that means we have to combine these singular 1 minute gaps into one. So this is now the gap that we would use to inverse from. Now what was extremely important is that price actually was still delivering from a 15 minute bullish fair value gap to the left. So you can see here that prices actually swept this low inside a gap, but the bodies actually held this bullish gap. So we are still respecting bullish fair value gaps. So that is another great thing to use when using this model. Now simply all we waited for is this gap to be inversed with displacement. And as you can see, we come straight back up and inverse with displacement. So this is now where we entered a long position, targeting that news high, and we left a little runner to this external swing at the top. Your stop loss goes a candle close back below these gaps. If you do want to set a hard stop loss, then set it below the recent low. It obviously removes your risk to reward and lowers it down dramatically, but it does give you an extra bit of wiggle room. If price does tend to wick down and still respect the gap, it does give you a bit of play, whereas I just use if a candle closes back below. So this is about 4.5, 5 risk to reward all the way to the top. And as you can see, when we play price through, we literally shot straight up and took out our full TP with literally 0 drawdown. This is one of the best trades I've taken this year, and that's a full breakdown of this exact trade. Now that I've broken down the actual trade, I'm going to be going through each individual entry criteria so you can actually go back and backtest this model for yourself. If you don't get a liquidity sweep, then you simply cannot take a trade. Okay, so what liquidity sweep is just simply a high or a low getting taken out in the market. So as you can see here, we've just swept this high, so now you will be looking for short. Okay, maybe potentially from this gap there. The second thing you need to be looking for is a clear and obvious gap that's 3 candles or less from the liquidity sweep. So what this means is that you need the fair value gap to be 3 candles or less from that actual liquidity sweep. So if we go back to the trade that we took, you can see that this here is the low. And this candle that left the fair value gap is actually the exact candle that leaves the gaps. Okay, so these are extremely close to this sweep. That is extremely important. Okay, you cannot be using a gap that is 25 minutes prior to the sweep. Okay, you can't be using this gap here. You can see we inverse and it actually fails. Perfect example of why we don't use these gaps. The third thing you're going to be needing is displacement through your fair value gap. So what that means is you need to see momentum actually break that gap. If the candle starts trickling through with no momentum, then it's probably not going to be a good trade, because it's not filling you with much confidence that there's momentum in your direction. And that's simply the easy way to think about it. If price action starts doing this, okay, and we start going slow and chopping around and doing this, is that giving you much confidence we're going to go higher? Not really. Okay, what is giving you confidence is the second we sweep this low, we actually just come straight back up. Exactly like we have done there. Okay, there is no question about it that there is bullish momentum coming up here. So you want to get involved in that. That is the whole point of this model. And the fourth and final thing that you need in this model is a good draw on liquidity / in line with your daily bias. Okay, now what that means again is that when you're looking for inversion setups, you have got to have an idea of where price should be going to. Now the reason we took this long position is because of what I said earlier. We had a news high. Now again, a news high and a news low is an extremely strong draw on price. So I knew at some point during this session, we should come up and take out this news high. And that's exactly what we did. It doesn't have to be a news high. It can be equal highs. It can be a swing point in the market. It can be, an unmitigated higher time frame gap. As long as you've got an area or a wick or a liquidity pool that you want to target, then that is all you need, okay? As long as your bias is in line with your trades, then you're already off to a good start and that trade has got a high probability of winning. Honestly, it is so simple once you actually know what to look for. Now I'm just going to go through one more trade example using the inversion fair value gap model. This one's going to be a short, so you've got a long position and a short position. Now one of my favourite types of trade to take is targeting trendline liquidity. A lot of you are going to know what trendline liquidity is. If you don't, and essentially it's just where price respects a trend line like this where it bounces off and we keep making higher highs and higher lows. Now all that's doing is essentially leaving a liquidity pool below. Okay, because we know every time that this trend line gets tapped, retail traders and people that trade trend lines are entering longs every time it touches this trend line. So we know there's people entering long here, there's people entering long here, and their stop losses are going to be below, okay? They've got to be below. So what we're going to do is target those. So once you've identified a trend line, simply mark the trend line out and never take a trade in that direction. Now I say this to my students all the time. Whenever we have a trend line, I will never enter a trade in line with that trend line. So the second I start seeing price respecting this, I will never take a long position that day or that session until this trend line gets broke. And I simply follow that. That is a rule that I have. Whenever you see a trend line, mark it out, and then this is now where you're looking to take trades actually against the trend line. So we want to see some kind of move up with an inversion back down. So now that I've marked the trend line out, this is simply where we just wait for a liquidity sweep with a singular clear and obvious gap. So we go back to that entry criteria that I've just shown you. So as you can see, we have just come up and made another higher high, sweeping out this external high in the market here. So this now becomes a liquidity sweep, which is the first step of the 4-step process. The second thing is obviously the clear and obvious gap. Now, have we got a clear and obvious gap? You can see that I've got a singular bullish 2-minute gap that stands out on the screen, okay? There's not many other gaps around that look like this one, apart from maybe this one down here, okay? Now this fair value gap is clear and obvious. It's also inside of the liquidity sweep, so it's 3 candles or less from the sweep. It's actually the exact candle. Now that you've identified your clear and obvious gap, all we need is a good draw on liquidity, which we've already established is this trend line liquidity. So our first target is going to be the bottom of this trend line liquidity, and that's where you can take your profits. And you'll see when I play price through, here we get that displacement. So this candle is clearly displaced through that clear and obvious gap. So this is now where you enter a short position on the candle close. Your stop loss goes back above the candle that inversed, and you simply target your draw on liquidity. Now simply, we just let price play out. And there you can see we hit full take profit. So this candle actually shot straight down and we hit 43 points, full TP got hit. Again with like 6 points drawdown. And that is generally how I use the inversion fair value gap model every single day. It is genuinely so simple. Stop overcomplicating it. If you follow this 4-step criteria and make sure you are strict with it and do not break the rules and don't start, taking trades you shouldn't, then you will be profitable. Honestly, backtest it, go back and backtest it, and I promise you will be profitable if you follow this exact 4-step process. That is it for today's video. Thank you very much for watching. If you did enjoy the video, then make sure you like the video, subscribe to my channel. It literally costs you nothing and it helps me out a lot. Also, don't forget to use the Apex codes and also the funded plat codes so you can get yourself a nice discount. But yeah, go back test this model, go forward test this model, and I can almost guarantee if you follow this 4-step criteria, you will be profitable.